Welcome back to the Brent Bruce Daily for November the 14th, 2022. It is now 3:49 p.m. Central Time, coming off of a little bit of a long weekend here because the mortgage-backed security world in the bond market was actually closed on Friday in recognition of the Veterans Day holiday, right after basically a historic day on Thursday. Last Thursday was an amazing day. If you did not watch the Brent Bruce Daily Report for last Thursday, go back and watch it again, because it was one of the largest moves that I've ever seen in the mortgage-backed security world. I've been doing this for 20 years, but for the last 15 years, I've been watching the mortgage-backed security world basically every day. And I don't think I've ever seen that dramatic of a move higher in the mortgage-backed security than I did on Thursday. Why is that? Because the consumer price index came out, and that is a measurement of inflation. And it showed inflation basically subsiding. Not like it's gone, but just it subsiding was enough for the mortgage-backed securities to completely rally and basically see home loan interest rates come down for a very well-qualified client a full 0.5%, maybe even 0.6% in a single day. Well, we need to follow through on that. So let's take a look and see what's going to be happening tomorrow that we need to also show inflation subsiding. And then also what the Federal Reserve is now thinking about the moves that happened on Thursday. Now, if you're appreciating or like this information, please make sure that you give me a comment, like, subscribe, share. If you can go to the YouTube page and make sure that you do mark like and subscribe, obviously that helps out my channel, and we will be able to continue putting this content out as much as we possibly can. So let's take a look and see where we're at on our charts first. Okay, so we're down 39 basis points. After a massive run up, we actually closed on Thursday. If you remember, I was talking about that I didn't think we were going to get above 200 basis points on the mortgage-backed security because it's a psychological level. I think that we're going to be stuck at that 200. We closed up 206 basis points on Thursday, a huge move all the way up here above this Fibonacci level. You can see we broke through the 50-day, we broke through the Fibonacci level. We ended up closing a little bit over this number here, opened a little bit lower, and now we are banging up against this Fibonacci level. It is now acting as a ceiling of resistance that might be kind of hard to break through unless we have something pivotal that pushes us through that and we can continue with our awesome rally and home loan interest rates coming back down. Now, being down 39 basis points is not good, but look, that is okay. The reason that is okay is that after such a massive run up on Thursday, I really wouldn't have been that surprised if we were down 100 today. Because thinking about it, even if we went up 200 on Thursday, coming down 100 the next day, we're still up 100 basis points, which if you watch this report, you know that is a great day. All right. Look at the 10-year treasury, up 1, not a big deal at all. Still at 3.861, which is below that 4.0, which, that's just my pet peeve. I don't like to see us over 4.0 right now. I want to see us under 4.0 in order for us to consistently see that as a ceiling so that we can improve. All right, so what's happening next? The next report that's coming out is tomorrow. Okay, so tomorrow we're getting the PPI, the Producer Price Index. This is a measurement of inflation also, but it's wholesale inflation. Okay, so let's go back to my Snickers bar analogy that I consistently use. So when you go to buy that Snickers bar at the register, and if that Snickers bar has gone up or down in price, that is consumer inflation. That is the consumer sees that inflation. Okay, so that is measured primarily by the Consumer Price Index and the Personal Consumption Expenditures reports that we monitor very closely here and that you're learning about because you're watching this channel. Now, the Producer Price Index is a little different because it measures wholesale inflation. So basically, take that Snickers bar and go to the manufacturers of that Snickers bar, Hershey's or Mars or whoever makes that Hershey's bar, and it's the cost of the chocolate and the nuts that they're buying. Is that going up or down? See, that's wholesale inflation. Now, usually if wholesale inflation is high, we can expect that it's going to get passed off to us as a consumer, and you would be right. So now that we've had a consumer price index report that came out showing inflation is subsiding, we also need to see wholesale costs subsiding. And that's what we're going to get tomorrow with our Producer Price Index report. In general, people are telling us, our sources, that producer price index should come in mild or showing inflation also subsiding, which would be excellent for us. Now, what we want is we want a report like that to continue to show that inflation is subsiding. Okay, so inflation went up for now what 2-3 years, and we believe, based on the reports that I'm putting out, that we are at the top and that we are going to begin to see inflation coming back down. Let me get over here. So we're at the top here, and we want to see it coming back down, that we are over the peak. Now, the Consumer Price Index report that came out on Thursday was the first. We were anticipating that. We needed to come in low or come in showing it subsiding. It did. So that means that it is affirming our expectations that we are going to now see inflation come back down, get under control. The Fed can calm down, mortgage-backed securities can calm down, and home loan interest rates can calm down. Okay, so we need the producer price index to come in showing inflation is subsiding. Okay, so if it does, and if things move forward, who is the other player that we're worried about? We're worried about the Fed, the Federal Reserve, right? So let's take a look and see how they feel about the fact that the CPI report came back showing inflation is subsiding. Well, let's jump over here. What do you know? Big front page report here on CNBC says Vice Chair Brainerd, so this is the Vice Chair of the Federal Reserve, Lael Brainerd, says it may soon be appropriate to move to a slower pace of hikes. Meaning, just like what we've been talking about, we want to see that the Fed begins to reduce the amount of increases to the federal funds rate. So they've been doing 0.75%, I think 3 or 4 times in a row. We need to see them say, look, we feel that inflation is subsiding. We're going to take our foot a little bit off the gas. We're going to pull back a little bit on our aggressiveness to the federal funds rate, and we're only going to increase it by 0.5% or 0.25%. So for her to say that means that she also is feeling like the effects of the moves that they've already made are starting to penetrate into the economy, and things are beginning to slow and inflation is coming down. Well, what does that mean to what really we're talking about here? What does that mean to home loan interest rates? Okay, so when we left on Thursday, we had gone from a 6.99% the day before to where we ended at 6.5% by the time I did my report. And we looked at the fact that realistically, for only a very small cost, you were at 5.375. So let's jump in here and run today's rates. Okay, here we are, 6.5%. So we are holding on to the 6.5% that we, celebrated on Thursday, even though we are losing 39 basis points on our mortgage-backed security right now. Okay, well, let's open this up, because if you watch this report much, you also are looking over here and you're going, wait a minute, there's a $1,530 credit. So how much is it going to cost to get to a 6.375? Let's get a little bit lower. What do you know? $151 gets you a 6.375 on a 30-year fixed conventional on the Brent Bruce Daily. Okay, what is the Brent Bruce Daily? Well, let's jump over here and let's say, well, basically it boils down to a very well-qualified 30-year fixed conventional home loan. That's the parameters and the scenario right there. I always want to put that up for those naysayers that don't believe that it's possible. So make sure that you pay attention tomorrow to how things go with the Brent Bruce or with the producer price index. Hopefully we see inflation subsiding. We will continue to see home loan interest rates improve, start to come down, and our expectations are starting to actually work out for us. Make sure that you like, subscribe, and share to the channel. Please do me that favor. If you have any questions or suggestions, let me know. Reach out to me. There's a link, I believe, in my bio where it actually has all my contact information. Have a great day. I'll get back with you tomorrow.